Good morning, everybody. Welcome to the Locking Your Success Options Trading for Income Weekly Update for March 2nd, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also please note that we are using hypothetical computer simulated trades and or results in the presentation. And although the results are believed to be as accurately represented as possible, live results may vary. If you're watching this on YouTube or some other venue, please come on over to our website, check out our programs. Got the M3, the Bearish Butterfly, Rock, M21, and our one-on-one coaching programs. And make sure you join our mailing list to get your free reports, 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. Also, stay tuned for our programs which are currently under development. We have the super simple spread trades coming out April 15th, which is going to include the V Condor among a couple other trades. We have our advanced position management program coming out, which is going to be a live presentation in May, right here in Manchester, New Hampshire, on the 18th and 19th. So make sure you keep abreast for the information coming out on that. We'll be getting that shortly. And also, we'll be looking at doing a trading triangle book and an online trading triangle course so that we can reach more people, hopefully by the end of the year. And of course, then we'll continue on with products after that. All right, let's take a look at the markets here. Last time we talked about the markets was 2 weeks ago. We were kind of thinking that Russell wasn't going to break higher here. I thought we were going to come up to this level and probably back down. Things started to change when we started looking at the other indices, and the other indices started breaking higher. And eventually it broke the Russell higher. We also said back at that time that was going to be a change in opinion, and it is. Essentially now that we've broken higher in all the indices and we just have this continual grind, we have no choice but to say technically the charts have all turned back bullish again in all indices, and our expectations for the market would be a general move in the direction of up. So what we're thinking here is we are due for some sort of a reset to a support level. I think the weakest index right now is the Dow. If we go back to there, should reset here somewhere between this 18,100 level and 18,000, or about just under 18,000. So I wouldn't be surprised if we broke down under this support level here and retested here, but we are looking for a general reset of either, like I said, around 18.1 or around 17.990. If that level is to fail, then that's going to start changing our opinion, thinking we might have a breakout failure. And of course, we'd want to watch the other indices for that. But the Russell reset point here is around 1220. Which we know will pull back. The SPX, I would expect to pull back to this level here, which is around 2090. And of course, the NASDAQ about 4350. So any move that holds above those levels would mean I would continue to be bullish in the markets. If we start breaking down under those, we may have an opinion change. I got a good comment here. General move in the direction of up. That sounds like a Dr. Seuss. That's great. Yeah, thanks, David. But anyway, that's what we're thinking. Like generally, we're going to be moving up. Other than we will very likely have some sort of a reset to a support level in at least one of the indices. I don't think all the indices are going to hit support levels. I think probably the Dow is going to hit something first, and possibly the SPX. The Russell and the NASDAQ may never reach those levels. All right, so that's what we have. Again, generally expecting things to rise. And I just got a question here, and the general question is, any specific reason I trade the Russell and not the SPX or the ES? I started my trading career on the Russell. I've kept it in the Russell. It works very good for the strategies that we have. The strategies will work on the SPX with minor modifications. You'll have to do modifications. However, your return is not as high on an SPX type of a environment, because the SPX isn't as volatile from a percentage standpoint as the Russell is. So the Russell tends to give you more bang for your buck while trading, although the liquidity is a little bit lower. But generally, if you're trading under $5 million, you're generally not going to have an issue with the Russell. You start trading over that, you'll want to push some of your capital into the SPX to deal with liquidity issues. If you ever need to make large adjustments and stuff, just know your returns are going to be slightly lower. Like I said, your bang for your buck's a little less than the SPX. All right, so that's what we have there. Let's take a look at what we got going on in our trades. So what I'd like to start with is the V condor. Now, one of the things about this up grinding environment is it's very good for condorish type of positions. So by that I mean any type of a high probability condor, any type of a high theta, high gamma position tends to do well here, including like a bullish vertical or something like that, and definitely including a V condor. So that being the case, this trade is not had any adjustments. We're just sitting here in the position that we entered. We're running about minus 63 delta. We're up about $4,400. Here is what that position looks like as of today. If we start to get an aggressive up move, then we may end up starting to buy back some of these calls up here. And of course, if we get an aggressive down move, I'll need to consider just closing this. Basically, I consider anything over 3,000 a good month in this trade, and we're already at 4,400. If we continue to hold a fairly tight range up in here, which I think we're probably going to do, I think we might reset to 1220 or so, and then possibly grind higher. That would be a jackpot month for this if the market continues to creep higher, right? And I got a comment from that, maybe take it off, it's maxed out. Yeah, I mean, you could take the position off. I don't think it's necessary to take it off, however, because like I said, we've had situations where if the market actually does cooperate and we grind higher, we could grind into this 1260 level, and if that happens near expiration, we could end up pulling $7,500 plus dollars out of this. We could, like I said, nearly double our money in this, so I think it's worth staying in. Realistically, what are our realistic chances of losing a lot of money here? Very minimal. So I'm just taking a look at the odds and saying, hey, if I stay in this thing and the market continues to do what it's been doing, we could pull almost twice the value out of this. It's worth staying in. There's really no reason to get out of this. Do I have any seminar info or guidelines of the V condor? Right. I don't have I don't have anything published on the V condor, and primarily because a lot of the times we've been trading this, it's been a little bit subjective in the way we've been managing it. What I've done though is I've put together a set of definite rules for the V condor that can be followed and work well. I mean, obviously, you're usually better off if you lean yourself a little bit towards what the market's doing and use a little bit of subjectivity in your trading, but you'll get better results overall. But I've come up with a concrete set of rules for the V condor, and those will be out with the super simple spread trades next month. So that's when that stuff's going to be out. It'll be out in that series. So I'm going to have that and a few other trades that we'll be dealing with that are quite effective in most markets. All right, so that is the V condor. Everything's going well there for March. Let me take a look at what else we have going on in March. We have our March M3, which I will go back to Monday. So our March M3 was started out, if you remember, I think we started with 13 butterflies to one condor. This, I think, did it have to be rolled? I don't remember. Let's see. We started out on the 23rd shorts at 1160. Yeah, so it had to be rolled up to 1180. In the process, we ended up coming out to spreading out to this broken wing condor type of structure, or adding 1180, 1190 verticals to control our delta. From there, as we started having delta issues, I started peeling off condors to get back down to my regular 10 lot size, and I continued to do that here. So if we take a look here at the end of the day, what I did is I sold off another one of those condors, and then I did 5, 1190, 1200 verticals to straighten out a delta problem. Now this is showing, okay, so this, one of the things OptionView has been doing to me on this particular month is it's been losing my call. So let me go back and see if I can get that back. Okay, I think we have the call back here. There it is. Let's shoot back to Monday. So this is what we looked like after the adjustment on Monday. We're minus 46 delta. We're outside the tent. We're holding our theta number is positive. Our vega is negative. This is essentially perfect. So this is what we look like as of the end of Monday. On Tuesday, we continued to get an increase in delta, which often happens as we get closer to expiration. We get increases of delta even though the market hasn't moved a whole lot. So to correct that, we did 5, 1190, 1200 verticals. And this is what the position looks like here. And I may roll up this call, if for no other reason, just to get rid of the fact that I keep losing it in the software. This is what our position looked like here on Wednesday. Thursday, I don't believe anything. Nope, there were no adjustments on Thursday. And then Friday. Okay, yeah, no, that's it. So there were no other adjustments from there. So this is what the position looks like as of the end of the day. Our delta is here. Let me put this position in. Position's up a little bit, but we're running some good numbers here. We're almost to the point, if the market continues, let me go to the next day, Friday. We're almost to the point of a roll-up here if the market were to continue up. But here we are on Friday. This is my T-log. I should have made a minor adjustment here. 24th. No, I did not. Okay. So today this will be due for another adjustment if the market doesn't come down significantly here. Actually, we are down more than that. Let me see if OptionView has updated. I think most of the down move was at the end of the day. But anyway, if the delta is high today, we'll make our adjustments. If we're over 1240, we'll do a roll-up. So this is what our position looks like here. This is what we look like. So we're outside the tent. We're going to start having vega issues, like I said, so we are due for a roll-up here, if nothing else, because our vega is very, very low. So that's what we look like on the M3. I got a request to see the complete T-log. So let me open that up for you guys. And then here is what we have. So you can see everything that's happened in the campaign so far. No, I don't want to say that. Okay. So here is, that was the March M3. So let's, okay, where do I think I'll do the roll-up? This is going to be due for a roll-up technically when I have a vega issue that's positive and it's not correctable. And the reality is this close to expiration with the volatility likely dropping, I'm not going to be able to control my volatility anything over 1240. So if at the end of the day or near the end of the day I'm up over the 1240 level, or if I'm having trouble controlling my vega and doing a vertical at 1200, 1210 is not going to correct that, then I'll just go ahead and roll this. Probably, let's see, I'll be at 1240, probably 20 points up, which is going to bring my short strikes to about 1200 for my lower wing. So I'll be due for that at that point. And that's when I'll do it. I'll do it when the Greeks tell me I have to do it. Otherwise, we can just hold position here. All right, so that is is the M3 for March. We also have a March rock trade, which was essentially entered as an M3 because that's what the volatility levels told us we needed to do. And I'm going to go back to Monday with this one as well. Just because of a sheer timing issue, this ended up being started at 1200. And that gave us quite a bit of an advantage this month because the market's just been kind of hanging here doing nothing, and it gave us put us in a much better position as far as a theta and Vega standpoint. So this is actually doing quite well. If we go to, let's see, Wednesday, we did have a maximum delta issue, so we did 5, 12, 10, 12, 20. So let's go to Wednesday. We did 5, 12, 10, 12, 20s. We put our delta. Now we're inside the 10th, so we're allowed a higher delta number, so we brought it back down to minus 67. Position looks like this. Very healthy looking position here. And then Friday, we again had some delta issues, and therefore did 5, 1200, 1220s. Now, this is the position that we're sitting in now. We're up about 1,600, and it looks like this. So at this point, this is not due to be converted over to a rock trade until we exceed probably about 1260, which I don't think is going to happen this month. I think we might get a retracement back to 1220, which is back in here. We'll manage our delta as the market increases to possibly the 1260 range. I don't think we go much higher than that. And this should be a nice trade, just staying in the M3 position for the month. As far as a T-log here, this is the complete T-log. We entered on 218. We did some adjustments on the 25th. We did some adjustments on the 27th. And that's what we look like there. All right, so what version of OptionView am I currently using? Starting with version 7.6, the OptionView calculates a gain-loss and matrix window differently. I don't know about that. Let's see. According to their support, now it may not include the P&L of previously closed positions. The previously realized gain-loss features will only include closed positions that overlap in time with a portion of your current position. This affects all who trade my methods. Andy, I will. I haven't. This is the first I've heard of that, and I'm going to have to call. If anybody else is having this issue, why don't we do this? I don't know if it's an issue independent to what Andy's experiencing or not, but if anybody else is having this issue, please contact me and let me know. I will. Apparently, the issue is that it's not the way it's calculating a profit and loss. It's not including your previously realized gains and losses in closed positions. So I don't know. Let me see if I can copy his comment. Either way, we'll work something around it. We'll work something around that if that is indeed an issue. So far, Andy, yeah, send me more details. Everybody else is reporting me they don't have a problem. I have somebody else who said that making a new account for every trade will resolve the issue if that's an issue you might be having. But yeah, if you want to send me more details on it, that would be great. And if anybody else is having issues with that, let me know. So please send it to me, and we'll see if we can straighten it out. All right, so complete T-log. Let me repost Andy's message in chat. All right, so I sent his comment out to everybody. So hopefully we can do that. No issues, no issues. Different account for OptionView every month doesn't seem to have an issue. All right, just a comment. I completely closed down an M3 and converted to a rock trade. Is it correct on? And it's correct on profit and loss. Okay, great. On the March M3, if Russell's just over 1240, near the end of the day, will you roll the upper long puts from 1230 to 1250 or 1260 strike? I'd only go to 1250. If I go up, I'd only roll probably 20 points, unless the market goes up a lot. If the market's just a little over 1240, I would go to a 1200 butterfly, which would put my long strikes at 1250. Let's see. All right, so that's all. That's all we have, and that's all we have for comments with that stuff. All right, so let's move on here. That is my March rock trade. If we take a look at our next position here, we have March bearish butterfly. Let's go back to Monday. These are not good bearish butterfly conditions. We just generally don't like to grind up. We're currently 3/3 entered into our March bearish butterfly. We are not having delta theta issues. We're not having maximum delta issues as of yet. We have hit some roll points. I have another forced mandatory roll at 1230 here on Monday. I had a forced mandatory roll with a market close over 1230, and that's what happened on Tuesday. And again, that was just a price point roll. So we rolled from our 1180 to our 1230. We're now sitting at about minus 570 profit and loss. Again, our Greeks look really nice. Here's what our position looked like coming into after that position. And Friday, we are 21 days to expiration. And being 21 days to expiration, it's time to start transitioning into our expiration guidelines. Now, if you remember, the expiration guidelines puts us at an end-of-day maximum delta at 250 and intraday at minus 500 with a position this size. What I don't usually do is I don't usually just go fully into those rules. I kind of gradually transition into them, and that being the case on Friday, I just brought my delta down under 500 for now. As we get pushed closer into closer to expiration, like towards the end of next week, I'll get fully into the expiration guidelines, but now I'm just kind of transitioning to them, and that prompted me to actually pull off 5 of these butterflies at 1200, again, to get my delta down under minus 500. This is what the position currently looks like with that adjustment, and this is what the T-log looks like with what we've done thus far. And that is that for the bearish butterfly. So I have a comment here. When using the variable volatility model in option view, the profit and loss point in the analyzed graph is consistently below the T+0 line. P&L aligns only when using. Oh, okay. I'm thinking what he's saying is, the profit and loss in this case here, as you can see it as well, is below our line. And that'll often be the case with option view if you're using the proper settings. What the dot represents is your actual profit and loss. What the line represents, if it's set properly, are your theoretical Greeks, your theoretical profit and loss numbers. And this line is going to more accurately represent what's going to happen to the profit and loss when the market moves. So what I do is I just assume that the profit and loss is going to be underneath, this far underneath the graph for the remainder of the trade. That doesn't always happen. Sometimes it'll match up. Sometimes it'll be above it. Oftentimes it's below it, depending on the environment. And like I said, I just ignore that. I'm using the true variable and combined put call skews to let the software correctly analyze how my position is going to react with price movement. I'm not necessarily concerned that the dot lines up with the line. So yes, you can change your volatility models and stuff to force the line to line up with the dot, but when you do that, you change your Greeks numbers, and they no longer accurately represent it throws off the projection of the T plus 0 line essentially. So and you can't use the numbers. Your Greek's numbers become a lot less useful if you do that. So this is the way we like to keep it. I have some problems maintaining delta when rolling up butterflies. After having done some of verticals to split the short strike, I end up with more downside longs than upside longs, and doing verticals. I'm assuming you're talking, Darryl, I'm assuming you're talking about an M3 position, and that's something that we'd have to go over. If you're not following the straight guidelines, then yeah, I mean you're doing something in there. I mean you can fix it, but that's beyond the scope of what this is going to be for in this presentation. What pricing models do I use? In my model here, I use. It really doesn't matter which one of these you use; they're all relatively close and the same. But I use Yates. I want the true delta gamma. True delta gamma throws in projections on what the actual price movement is of the options, rather than what a standard model would do. It's a lot more accurate in doing that, and I do use combined put call skews in my models, and my volatility is variable. So I do use combined put call skews. All right, so that's what we have for that. All right, so that's all the questions there. Let's just kind of move on here. That's all we have for March. And April, we don't have a whole lot going on. We had our April V Condor, which again has been very mild. No adjustments. This is what we currently look like here. We're up about $814 as of late in the day on Friday. Here's what our position looks like. This is probably going to have to eventually have the V taken out of it, because I just don't think we're going to be going much higher than 1260, 1270, and then we're probably going to have some sort of a meaningful retracement. But as of right now, there's no reason to do anything. We'll just hold this position here. Our April M3 trade, again, has had no adjustments in the last week. This was our entry position. Still happy with the position. We are still inside the tent. Our delta is still in line. Our vega is still in line. This is just a really healthy looking position here. We have our April Bearish Butterfly, which was entered at the same strike level. Over 1240 is our add point, which we haven't actually hit that yet, so we haven't hit an add point. We may start running into delta theta issues here, and I believe we did actually on Thursday have a delta theta issue. A little bit of a judgment call on whether you want to actually jump this and roll this forward. If I'm 1/3 entered and I'm borderline and I'm near an add point, I usually won't do my delta theta roll. I'll usually hold out to see if the market does actually go higher or if it pulls back down. However, I do keep in mind that I was at or over my delta theta ratio, and if I have to do the add, I will roll up. So I'm sitting here. I'm willing to hold it without rolling it up if I have a delta theta issue problem. If the market goes up, then instead of adding just adding a 1220, I'm going to add the 1220. I'm going to roll a 1240 because, like I said, I know I had that delta theta problem. So that is that. And that's all the positions. And I just a comment from Darryl that Option View last week says they don't recommend using the combined put call skews, and that's true. They don't, but I do, and that is the way to analyze these positions. That's the way they've been traded for years. It's the way that they were back tested. It's the way that that's the way that it works. Believe me, I have hundreds and hundreds of students trading these, and I'm in contact with every single week. Very successful students. We're trading it using these settings. These are the settings that most accurately represent what's going to happen to the position, and they are the settings to use. So use your combined put call skews. If you don't do that, what you're going to end up with is you're going to end up with a continual drawdown in these grind ups. if you get in extremely choppy markets, you're actually better off unchecking that. But in grinding markets, you're definitely much better off with them checked. All right, one question regarding some days ago at a higher volatility, I had a situation where the mid prices for the put fly and call fly and iron fly were within 15 cents. I took the lowest price and got an immediate fill with the imagination that I bought too expensive. Option view spread price was 50 cents below the other three. How to avoid paying too much? You avoid paying too much by starting at a price to your benefit. So, I will do that. I will make an analyzation. I will analyze the prices from the three variations. Actually, there's actually 5 variations that you have. So I'll analyze prices from the 5 variations. I'll take the best guess at where I think it's going to fill, which I'm usually pretty close at. However, yeah, I mean, we're not just looking at that at the moment. We're looking at those prices over time if we can. In other words, I might watch those prices for an hour, 2 hours, or maybe even 3 hours before I actually make the decision on where to put the price if I'm around. If I'm not around, then I just do my best guess. So, here, and obviously you can take the option view spread price too, and if the option view spread price is 50 cents below the other three, you could obviously go with the lowest price there as well, and you could use the option view spread price. But generally, if I have something I want to buy for 50 cents and everything's showing me 50 cents, I can start it out at 25 cents. I can start out at 10 cents. I can still start it out way down there, knowing that I'm probably not going to get filled till 50 cents, but if it fills it at 10, great. So it's just a matter of throwing some prices out there and letting them sit for a while, seeing if they're going to actually take them. And going from that. So it's a trial and error type of thing. And every situation is different. What works today might not work tomorrow. But the best thing you can do is just go in there and put your prices to your benefit, let them sit for a while, and then gradually increase your pricing to where they'll actually fill them. Unless, of course, you have to have it done. If you have to have it done right away, then you just you do what you need to do. But there is a benefit to having patience and being able to wait. All right, so that is all the positions, and that's what we're expecting for next week. So hopefully the market continues to go to our benefit. Things are going pretty well so far, and we'll talk to you next week. Have a great week, everybody.